Welcome back to the Dinar Daily, the essential source for currency intelligence, delivering the pulse and beat of global financial movements directly to you. I'm your host, and today's broadcast positions us right at the forefront of what may be the most critical financial development of this year, and perhaps even the last decade. This is not a typical market update. This is the moment when long-held speculations begin to solidify into concrete, unfolding events, giving an entirely new weight to the phrase October surprise for investors, traders, and everyday individuals monitoring the global financial horizon for an extended period. Many in the mainstream financial community have casually dismissed the discussions surrounding the potential for a significant revaluation of the Iraqi Dinar (IQD). Similarly, the notion of the Vietnamese dong (VND) achieving a greater level of global prominence was often met with skepticism and even derision. These currencies, along with subtle yet steady shifts in the global banking architecture, were often ignored as mere background noise. However, what we are now observing is far beyond mere theoretical conjecture. It is a verifiable reality, a financial tremor beginning to ripple outward, offering a potentially profound realignment opportunity for those who have positioned themselves with careful wisdom. This is not a matter fueled by exaggerated claims or fleeting market hype. Instead, it is driven by data momentum, verifiable movements, and fundamental shifts that are being tracked across international financial systems. The widely anticipated October surprise is now actively manifesting, and the detailed information you are about to receive offers a vital perspective on how this moment is influencing the established understanding of international finance, the role of national reserves, and the intricate, often hidden mechanisms that govern the global economy. This comprehensive report is more than a simple notification. It is an analytical spotlight on unfolding history. When financial analysts employ the term October surprise in a market context, they are typically referencing a sudden, high-impact geopolitical or significant market shift that occurs late in the year as fiscal periods draw to a close. These moments often serve either to confirm long-suspected underlying patterns or to stun even the most seasoned economic professionals with their sheer speed and substantial magnitude. In the current context of 2025's apparent October financial surprise, the analytical focus has been intensely directed towards two currencies that were often sidelined and considered mere regional outliers: the Iraqi Dinar and the Vietnamese dong. Both of these monetary units possess complex legacies, having been profoundly shaped by periods of intense conflict, subsequent national economic restructuring, and considerable foreign influence over their valuation. Crucially, however, they also harbor an untapped economic potential that, until very recently, was only faintly registering on specialized global trading screens. The Iraqi dinar, long held back by a confluence of international sanctions, domestic economic mismanagement, and the lingering destabilizing effects of conflict, has, over the past few years, received quiet yet substantial support. This support comes from its significant oil-backed revenues, measured central bank reforms, and collaborative agreements with international partners, aimed at fundamentally stabilizing its long-term value. Simultaneously, the Vietnamese dong, which has been strategically maintained at deliberately undervalued levels to bolster the nation's immense export growth, is now experiencing increasing pressure to appreciate. This is a direct consequence of Vietnam's successful consolidation of its position as a major global manufacturing hub and a critical, reliable supply chain alternative to China. Taken together, these two currencies represent far more than just local money. They are becoming crucial indicators of a noticeable and developing shift in the global financial balance of power, signaling fundamental adjustments to global trade and capital flows. The timing of October is not purely coincidental in this context. Historically, this month often marks a period for significant fiscal adjustments, comprehensive banking reviews, and monetary recalibrations across nations worldwide. Governments are often finalizing budget preparations, central banks are reviewing their critical reserve positions, and trading volumes frequently see a noticeable spike as the year-end approaches. The powerful convergence of all these systemic factors in October 2025 gives this financial surprise its unique characteristic. It is not a mere subtle hint of future change. It is, analytically speaking, a clear and decisive indicator of a significant historical moment unfolding. The so-called October surprise we are currently observing is not a single, isolated market rumor, nor is it merely the predictable, recycled chatter that many long-term investors have understandably grown desensitized to over many years. This time, the comprehensive data points are aligning consistently, the confirmations are becoming clearly visible through multiple channels, and the timing appears carefully orchestrated and deliberate. Iraq has now moved to officially confirm active steps towards full Forex integration, representing a monumental, structural shift that aims to transition the Iraqi dinar from being classified as an exotic currency to one that is fully recognized and tradable on mainstream international trading platforms for decades. The IQD was largely relegated to the financial sidelines, traded only in highly specialized, niche corners of the market and widely dismissed by the majority of global financial institutions. However, with this recent strategic move, Iraq is decisively signaling that it is no longer willing to remain a financial footnote. The Central Bank of Iraq, CBI, has been engaged in direct, ongoing collaborative work with officials from the U.S. Treasury, and new reports surfacing this week confirm structured, targeted liquidity injections. These injections are explicitly designed to stabilize the dinar, preparing it for a much broader international utility. This development is not founded on speculation. It is an example of structured alignment, a precise and measured recalibration of national currency policy that sovereign nations only undertake when they are preparing for primetime participation on the global financial stage. Simultaneously, the Vietnamese dong has been flagged for potential systemic upgrades, with sources within the International Monetary Fund (IMF) hinting at a possible official reclassification before the year concludes. Such a fundamental development would allow the dong to pivot toward a more flexible managed float system, effectively breaking from its long-established, deliberately undervalued peg. A significant factor lending weight to this unfolding narrative is the behavior observed within the international banking sector. Major U.S. financial players, including institutions like Chase, Wells Fargo, and HSBC, have been reported to have quietly updated their internal currency screens. This type of systemic, preemptive technical adjustment typically serves as a precursor to much wider formal recognition across both retail and large, institutional trading platforms. When viewed collectively, these reported systemic shifts embody the true essence of the October surprise, not a political or media spectacle, but a deep monetary restructuring, representing a deliberate and strategic repositioning of both the IQD and the VND on the global financial chessboard. The long-established rules of international currency engagement appear to be actively changing, and the stakes involved are increasing significantly. Those who have maintained a careful and informed watch now understand precisely why the month of October has often been cited as a critical period for potential financial shifts. The Iraqi dinar has consistently been a focal point of intrigue among currency analysts, financial insiders, and long-term investors who diligently track substantial, latent shifts in the worldwide monetary landscape. Recent, unverified insider reports suggest that certain specialized foreign exchange (Forex) terminals have reportedly been conducting test runs for the IQD at rates said to be in the range of 392 to 458 per currency unit. While the reported existence of these rates is not yet publicly confirmed and they remain inaccessible to everyday retail traders, their mere mention has ignited considerable speculation that Iraq is actively preparing for a significant revaluation event. The concept of stabilization bands has been referenced in various leaked briefings, suggesting that before any comprehensive, widespread release to international markets, the currency must first demonstrate a sustainable, predictable behavior within carefully controlled parameters. This controlled approach is considered a common and crucial practice when a nation is transitioning its currency from an artificially suppressed or heavily managed exchange rate toward one that is intended to be a more realistic reflection of its underlying economic potential and its significant resource backing. For Iraq, this potential is profoundly underpinned by its vast, certified oil reserves, its strategic geopolitical trade position, and the massive, ongoing national rebuilding efforts following years of destabilizing conflict. Should the IQD indeed emerge into the four-range valuation, the ramifications would be substantial, not solely for individual investors, but also for Iraq's entire domestic economy, which would gain greatly increased purchasing power and enhanced credibility within global financial circles. Such a fundamental move would also signal a deeper, more credible cooperation with key international monetary organizations and would firmly mark the nation's reintegration into a stabilized, competitive economic role within the Middle East region and globally. In parallel with the IQD, the Vietnamese dong is also attracting significantly heightened attention due to early October indications of notable exchange rate fluctuations. According to unconfirmed reports, values have been reportedly observed between 49 cents and 82 cents per 1,000 VND, representing a significant analytical departure from the currency's historical perception of being undervalued in global trade. This is not a simple, random movement of numbers on a screen. It potentially signals the unraveling of decades of artificially suppressed valuations that may have inadvertently prevented Vietnam's currency from fully reflecting its true, substantial economic expansion. Over the course of the past 2 decades, Vietnam has transformed into an undeniable economic powerhouse in the areas of manufacturing, export-driven production, and accelerated technological development, securing major strategic partnerships with many of the world's largest economies. However, its currency has often lagged behind, failing to accurately capture the true scale of its profound economic modernization. Should the VND sustain these reported test rates, it possesses the potential to fundamentally reposition Vietnam not merely as a regionally competitive player in Asia, but as a swiftly rising global financial influence, equipped with a currency that commands respect and strength on the world stage. This magnitude of revaluation would inevitably generate significant ripple effects across foreign investment flows, existing trade contracts, and all cross-border financial activities, as a stronger VND would fundamentally alter the balance sheets for multinational corporations and trade partners globally. Such significant currency movements are considered by analysts to be anything but random. They highly suggest carefully orchestrated and controlled trials specifically intended to accurately gauge market reactions in advance of a major, structured adjustment. When analyzing the Iraqi Dinar and the Vietnamese dong collectively, their simultaneous appearance in discussions of potential hidden test rates suggests more than a simple coincidence. Many analysts believe these parallel moves could be directly linked to broader, theoretical global currency reset (GCR) mechanisms, concepts which have been extensively theorized for years but have rarely been witnessed in public action. The theoretical GCR concept fundamentally involves a comprehensive recalibration of currencies that are perceived as suppressed or undervalued, aiming to align their value with real economic indicators, such as a nation's quantifiable natural resources, its actual GDP growth, and its tangible production capacity. If both Iraq and Vietnam are indeed entering this structured transition phase simultaneously, it highly suggests a degree of coordination at a much larger scale, potentially orchestrated by leading international financial institutions or undertaken in direct alignment with comprehensive regional economic reforms for the broader global markets. This type of synchronized shift would be absolutely groundbreaking, fundamentally altering not only bilateral trade agreements but also the mechanics of international capital flows, the composition of global currency reserves, and potentially even established geopolitical alliances. This significant realignment could serve to strategically reduce the world's current heavy dependency on a few over-leveraged fiat currencies and simultaneously encourage healthy diversification into previously overlooked nations whose currencies were historically considered weak or unstable, while many skeptics may argue that these reported shifts are temporary anomalies or speculative market noise. The discernible patterns now emerging within specialized Forex testing environments are considered by many to be far too structured and specific to be easily dismissed. If the IQD successfully stabilizes near the $4 mark and the VND edges closer to a measurable fraction of a dollar per unit, we may well be witnessing the foundational early stages of a profound financial rebalancing that could significantly reshape global wealth distribution, international trade priorities, and long-term investment strategies for decades to come. When analyzing currency developments of this magnitude, the perspectives offered by expert voices provide vital context that goes far beyond the analysis of raw numbers. Dr. Michael Harrington, a highly recognized global Forex strategist with decades of experience tracking emerging market currencies, frames the current October activity as an event that is both expected and unprecedented in its timing. His expert analysis underscores a central reality about currency markets. While volatility often appears random to uninitiated retail investors, within the highest echelons of financial policy and institutional banking, comprehensive revaluation strategies are very rarely improvised. The proposition that both the Iraqi Dinar IQD and the Vietnamese Dong VND would surface test rates simultaneously hints strongly at high-level, deliberate cooperation, likely connected to the broader monetary realignments that have been long discussed within influential financial think tanks. Dr. Harrington's use of the word coordinated cannot be lightly dismissed, as it suggests an intentional, structured orchestration that transcends simple, isolated market speculation. To professionals in the field, such evident synchronization is a clear indication of preparatory steps for potential global shifts in the dominant trade settlement currencies, the structure of energy-backed financial systems, and significant multilateral banking agreements. In essence, Dr. Harrington's crucial insight suggests that while the October adjustments may have caught casual observers off guard, industry insiders view this as the logical, anticipated unfolding of a long-prepared script. This analytical perspective lends considerable weight to the notion that the reported test rates are intended precursors, not random anomalies, and clearly signals that significant recalibrations are transitioning from the phase of mere whispers into the active implementation stages. Adding further analytical weight to this crucial perspective is Lina Al-Had, a prominent Middle East economic analyst who has meticulously tracked Iraq's financial recovery and complex reform process over the last 10 years. Her published remarks are notable for their degree of confidence. She asserts that for Iraq, systemic stability is no longer a theory. Under the guidance of comprehensive banking reforms and direct IMF oversight, she states that revaluation is not a question of if, but rather when, characterizing October as the staging ground. Al-Had's statement deeply resonates with those who are closely familiar with Iraq's challenging journey from conflict-driven instability toward institutionally guided structural reform. In the past, the Iraqi dinar was largely viewed as little more than a speculative vehicle, fueled more by unverified rumors than solid economic fundamentals. Yet today, operating under strict international oversight and actively restructuring its domestic banking architecture, the nation has demonstrated measurable and verifiable progress. The presence of IMF-linked mechanisms for auditing, compliance testing, and monetary policy alignment reflects a system that is no longer prone to arbitrary collapse, but is instead being strategically guided towards sustainable, long-term stability. When Ms. Al-Had refers to the staging ground, she is highlighting October not as the final conclusion of this economic journey, but as the critical point where abstract theory is transitioning into structured reality. The potential revaluation of the IQD is no longer solely speculative fiction. It is emerging from a solid foundation of practical national reforms, complex creditor negotiations, and continuous infrastructure modernization. For all stakeholders, her words serve as both an important validation that Iraq's reforms are credible, and a necessary caution that precise timing and carefully controlled releases are absolutely central to preventing any destabilizing surges. Finally, Robert King, a seasoned U.S. banking insider with unique access to corporate desk flows, provides a crucial perspective rooted directly in institutional behavior rather than broader geopolitical narratives. His blunt assessment is clear: big banks don't flip internal rate screens for fun. He further states that institutions like Chase, Wells, and HSBC are actively preparing for real liquidity events and that October is the precise moment insiders knew was coming. Mr. King's direct assessment effectively cuts through market speculation by focusing squarely on the operational mechanics of major financial institutions. For retail observers, mere test screens may appear meaningless, but within the secure walls of multinational banks, systemic adjustments are a serious operational undertaking. When rate placeholders are shifted, compliance teams, treasury divisions, and extensive cross-border payment structures are all directly and heavily involved. His clear assertion that these powerful institutions are preparing for liquidity events suggests that the current October activity is not merely about testing. It is fundamentally about readiness. This readiness involves preparing for potential large-scale capital inflows, the complexities of foreign exchange conversions, and managing potentially unprecedented transactional volumes. The specific reference to Chase, Wells Fargo, and HSBC is particularly telling, as each institution plays a distinct, pivotal regional and global role in handling massive-scale currency movements. Mr. King's remarks clearly signal that what is being observed publicly through leaks or rumors is being mirrored and validated by the private, operational machinery of the world's largest banking systems. For financial analysts, this is a critical distinction. An insider acknowledgement of this operational readiness strongly indicates that the so-called window of speculation is now narrowing, and the highly anticipated window of execution may be actively opening. The essential role of global banking institutions cannot be overstated in the systemic shift of this sheer magnitude. Chase Bank, one of the largest U.S. banking entities with both extensive retail and massive institutional reach, has been cited in reports linking some regional branches to visibly displaying test rates for the Iraqi Dinar. Customers in select locations have reportedly confirmed observing Forex placeholders on branch screens that displayed unexpected value adjustments. While bank representatives have formally denied the significance of these reported fluctuations, the consistent nature of such reports raises critical analytical questions. Internal testing of new rate screens is not a consumer-facing activity. It is strictly designed for back-office verification and compliance testing. If Chase branches were indeed displaying such values, even as an operational error or in placeholder format, it strongly points to coordinated system testing within their broader, highly complex network. This is particularly notable because Chase, part of JP Morgan, maintains a crucial reputation as a major liquidity provider across multiple asset classes, including the vital energy markets where Iraq is a direct, substantial participant. The reported alignment of their internal systems for IQD activity strongly suggests that any comprehensive revaluation scenario would require Chase to act as both a key facilitator for corporate trade settlements and a significant conduit for retail redemptions. For informed observers, the bank's quiet operational readiness reveals a dual-track approach: publicly dismissive, yet privately and structurally operational. Wells Fargo, another major U.S. banking giant, has also surfaced in insider reports. Unlike Chase, which operates extensive direct global liquidity channels, Wells Fargo's operational role is often more heavily concentrated in domestic consumer and corporate financial services. However, its internal memos reportedly referencing preemptive compliance testing highlight rigorous preparation efforts that closely mirror the activity reported at Chase. Analysts monitoring Wells Fargo's corporate foreign exchange desks have reported unusual volumes of activity this October. suggesting systemic adjustments that are not aligned with traditional seasonal capital flows. This observed behavior is particularly significant because compliance testing involves rigorously validating that anti-money laundering (AML) systems, know your customer (KYC) frameworks, and cross-border payment processes are fully capable of handling sudden and potentially sharp liquidity movements. If Wells Fargo is actively testing these internal processes with specific reference to revaluation events, it demonstrates an institutional awareness that a sudden, substantial influx of both IQD and VND conversions could severely stress existing financial frameworks. Given Wells Fargo's deep integration into U.S. Treasury-linked systems, their compliance activities are often observed or coordinated at federal oversight levels, making unusual internal movements in October a compelling indicator of preparation for potential systemic stress tests directly tied to currency realignment events. Meanwhile, HSBC's reported role carries a unique and critical importance due to its vast geographic footprint and its long-established, deep presence in Asian markets. As one of the world's largest banking institutions with extensive liquidity channels bridging both Western and Eastern financial systems, HSBC is exceptionally well positioned to facilitate movements of the Vietnamese Dong Insider. Accounts from its Asia desks reportedly indicate comprehensive preparations for liquidity adjustments that are directly tied to the VND. This reported activity fully aligns with HSBC's strategic position as a critical bridge between Asia and Western economies, particularly in the management of complex financial flows involving key nations such as China, Vietnam, and the United States. Analysts suggest that HSBC would likely be among the very first movers in the handling of revalued VND transactions, given its immense scale and deep integration into regional markets. For Vietnam, a credible global partner of HSBC's standing is essential to ensure that foreign investors and multinational corporations can smoothly adapt to new valuation realities without causing a debilitating paralysis in trade contracts or critical export-import settlements. If HSBC is indeed actively preparing for this currency transition, it strongly implies that the reported VND test rates are not merely hypothetical. They are concrete steps toward practical readiness for the broader global financial system. HSBC's deep involvement signals the internationalization of what might otherwise be viewed as localized regional currency events. By providing a stable bridge for liquidity between the East and the West, HSBC may play a pivotal role in ensuring that any revaluation is not disruptive, but is strategically and smoothly absorbed into the fabric of global finance. Friends, let us take a necessary moment to truly reflect on what the long duration of this journey has truly required. Patience is not a passive waiting game. It is, in fact, one of the strongest and most active demonstrations of discipline, clear vision, and deep-seated courage in the financial world. For years, observers have navigated through persistent whispers, numerous false alarms, and endless cycles of unverified rumors that ultimately led to nothing. You have had to rigorously filter through continuous noise, endure the skepticism of others, and stand firm even when the wider financial world seemed determined to convince you that nothing would ever fundamentally change. Yet, here we are, collectively standing on the analytical brink of a moment that seems to confirm a core principle. Thorough preparation often triumphs over persistent doubt. The current October surprise is not merely a financial event. It is, for many, a form of profound validation. It offers compelling evidence that those who possess the endurance, who commit to continuous study, and who refuse to underestimate the potential for change will, at some point, see the tide of financial history turn in their favor. This is not about chasing fleeting hype. It is about being intelligently positioned for the eventual day when speculation fully transitions into documented reality. And now, as the undeniable tremors of change are beginning to ripple across the global Forex stage, a powerful analytical truth is emerging. The patient shall be strategically rewarded with clarity and opportunity. This core mantra is not just motivational. It is sound financial wisdom rooted in observation. Those who rushed their decisions, those who reacted in panic, or those who treated this journey as a simple, reckless gamble have long since exited the field. But you, the informed viewer, have demonstrably remained. And because you remain vigilant, you are here at this critical moment, equipped to approach any potential developments with both clarity and conviction. Maintain your steady focus, remain fully informed, and always remember this: wealth is rarely made in the chatter. It is made in the prepared, decisive action you take when the crucial timing window finally opens. History consistently favors those who demonstrate true endurance. And now, your prolonged patience appears to be approaching a moment where it may be met with significant opportunity. However, information without a corresponding action plan represents wasted potential. Moments of this magnitude demand not just passive awareness but a proactive state of readiness. If you are regularly tuned into this broadcast, it is because you fundamentally recognize that opportunity heavily rewards preparation. Therefore, let us review the exact steps that informed observers must consider in these decisive days. First, meticulously organize all your currency holdings. This means far more than simply knowing where the currency is physically stored. It requires having all holdings fully secured, accurately documented, and absolutely ready for swift verification. Logistical uncertainty has historically cost many investors valuable time during transitions. Do not allow it to cost you. Second, know your potential conversion banks. Institutions like Chase, Wells Fargo, HSBC, and Bank of America are not just corporate names. They are the potential gateways to conversion and liquidity. Study their policies, prepare detailed questions, and ensure you fully understand the specific internal processes that may soon unfold. Third, maintain a degree of financial liquidity. The critical opportunity will not wait for those who are scrambling to move funds or liquidate other assets. Keep cash reserves readily available for necessary appointments, travel expenses, and any unexpected logistical requirements. Fourth, stay continuously tuned in. The next 72 hours could potentially bring staggered updates, specific banking confirmations, or major institutional announcements. Missing a single update could mean missing the critical timing window for necessary action. Finally, and perhaps most crucially, remain calm. Financial shifts of this significant magnitude often arrive suddenly, but the successful participants are always those who remain calm, fully informed, and quick to act with precision and clear thinking. You have observed this situation for too long to falter now due to panic or indecision. Your detailed preparation will be your most significant advantage, and this comprehensive analytical checklist is not just generalized advice. It is your strategic blueprint for standing ready when history actively opens its doors. October has delivered its undeniable surprise, and what a moment of observation it has been. But let us be absolutely clear in our analysis. This is not the end of the journey. It is only the crucial beginning. What we have analyzed so far represents the first tremor, the opening, highly structured move in what could become a truly historic realignment of global currencies and the vast banking systems that surround them. Friends, the real, verifiable news, the specific, public announcements, the confirmed banking updates, the developments that could fundamentally alter the playing field forever may ignite in the coming days. You will not want to miss a single crucial development. That is why I urge you now to ensure you are fully subscribed to the Dinar Daily. Turn on those vital notifications and share this important broadcast with every fellow observer, every friend, and every family member who deeply understands the importance of being fully ready when opportunity finally knocks. This conversation is not centered on hype. It is centered on preparedness. It is about ensuring that tomorrow's financial headlines strategically reward the prepared and do not punish the unready. So, as we conclude tonight, let me leave you with one powerful reminder rooted in financial history. Stay strong, stay fully informed, and above all, maintain a clear perspective. You have come too far in your observation to lose focus now. The patient shall be rewarded, and the analytical horizon has never appeared more promising than it does at this very moment. This has been the Dinar Daily, your dedicated source for verified updates and analytical insight. We are signing off until the next historic update. Stay vigilant because a pivotal moment in financial history is unfolding directly before your eyes.